Well, we've seen a big rebound in tech stocks since the tough days in mid to late December, and we've seen earnings growth there too, and I would expect that to continue through 2019. The question mark all along is what are investors willing to pay for that? Rates have been low, as you know, and so investors are willing to pay more for the great tech companies. They had an opportunity to buy them, albeit briefly, in the fourth quarter, and they're paying new heights for them today. And the question for me is how much are they willing to pay for them? Because I think the numbers are going to come through in 2019.
All right, Tony, what's your take? Do you think that tech still offers a valuable return on investment?
Yeah, great conversation. Something that's worth thinking about right now. To go along with what Mark just said, low rates, this idea that we're going to go back to a lower for longer environment and kind of the Powell put being back has caused tech stocks and information technology stocks and some of the blood and guts, industrials to rally pretty hard this year. No, we don't think that's going to last. The biggest problem is valuation. Okay, the disparity between the really rich and kind of the poor in terms of the forward valuation is at the greatest heights that it's been since 1999. And in our view, when the market gets back towards sorting that out and what's going to be the next leaders in the next decade, we do not think it's going to be the leaders of what were in the past decade at all. And in fact, we think there's a lot of room on the lower side of the valuation range to be upwardly revalued in the market. There's a lot of very cheap stocks out there right now.
So, Tony, decade ahead aside, but year ahead in focus, we've seen the banks do well at the start of the year, which on one level is kind of odd since the Fed has signaled it's going to hike rates less. What do you expect from the Fed, and what does it mean for the financials for the rest of the year?
Yeah, we expect that Powell will ultimately be vindicated by raising rates like he's done. For him to pause right now is warranted, but we think he's going to get back on track to raise rates at some point in time, driven by the economy expanding in a greater way than what the consensus currently believes. We think the demographics would suggest that is well in place for that to happen. There has not yet been the animal spirits that have kicked in, for example, in the generation of millennials and what they're going to do in the next 12 to 14 years as they do household formation activities, which are very normal for them to do, and to take on statistically 4 times the amount of debt into their lives than they currently have on their balance sheets today. And they have ample room to do it. Their balance sheets are extremely clean. That's the kind of thing we haven't even seen yet from the banks and the tailwinds that we think are going to be there for the banks going forward.